I was just tuning into the latest Yosef Rogan podcast, and they were talking about insider trading with Pelosi, Nancy, and that kind of a thing. I just watched the little clip, so I thought, well, let's dig in a little bit and check it out one more layer deeper. So I thought of Martha Stewart, as I'm sure a lot of people do, and I went to her Wikipedia pagia, and where do we go? Stock trading case. So, according to the U.S. Securities and Exchange Commission, SEC, Stewart avoided a loss of $45,000 by selling almost 4,000 shares of her stock after receiving material, non-public information from this person, her broker, at this place. The day following her sale, the stock fell 16%. So, they have this like I'm not a lawyer, but is this material evidence like the significance of facts to the matter at hand? So I imagine there was like an email, or I can't remember, it was so long ago, but there was probably some proof that it happened. And then non-public is the trading of a public company stock or other securities based on material non-public information about the company. In various countries, some kinds of trade based on insider information is illegal. This is because it is seen as unfair to other investors who do not have access. So, non public, I think that's primarily in the context of within the company itself for the most part, but an insider themselves, if we go to the Wiktionary definition of insider, it's actually the first number one definition: a person who has special knowledge about the inner workings of a group, organization, or institution. So that person could, sounds like, be outside of the organization. The Security and Exchange Commission is probably pretty much the final word on the subject for anybody who would want to go one layer deeper. But yeah, so I read that and I'm like, okay, that kind of makes sense, right? I mean, you figure 16%, she avoided like the loss of a fair amount of money. I don't know. She supposedly was like one of the richest women in the world at that time, I think. Or at least that's what it seemed like. So 45K to her probably wasn't the hugest amount. Probably be like $450 to us or something, I imagine. But who knows? So anyway, I go over to insider trading because I'm like, well, what's Wikipedia got to say about that kind of a thing? And I don't know what it's doing way down here. So insider trading, trading public company stocks or other securities based on material non-public information about the company in various countries. Actually, I think I was just at the spot that shows it. Okay, let's go to definition of insider. Corporate insider is defined as a company's officers, directors, any beneficial owners of more than 10% of a class of the company's equity securities. Trades made by these types of insiders in the company's own stock based on material non-public information are considered fraudulent since the insiders are violating the fiduciary duty that they owe to the shareholders. A corporate insider, simply by accepting employment, has undertaken a legal obligation to shareholders to put the shareholders' interests before their own in matters related to the corporation. When insiders buy or sell based on company-owned information, they are said to be violating their obligation to the shareholders. For example, illegal insider trading would occur if the CEO of a company learned prior to a public announcement that their company will be taken over, then bought shares in the company while knowing that the share price would likely rise. In the United States and many other jurisdictions, however, quote unquote insiders are not just limited to corporate officials and major shareholders where illegal insider trading is concerned, but can include any individual who trades shares based on material non-public information in violation of some duty or trust, which implies Pelosi, right? This duty about may be imputed, for example, in many jurisdictions in cases where a corporate insider tips a friend about non-public information likely to have an effect on the company's share price. The duty of the corporate insider owes to the company is now imputed to the friend. Wait, the duty the corporate insider owes the company is now imputed to the friend, and the friend violates the duty to the company if he trades on the basis of this information. Okay, so that sounds like the part that applies to Martha Stewart, right? All right. So if we go down here, there's a where's the thing? United States law, statutory. I just saw it. I should go up to the table of contents. United States statutory court decisions by members of Congress. Members of the U.S. Congress are exempt from laws that ban insider trading because they generally do not have a confidential relationship with the source of the information they receive. Excuse me. However, they do not meet the usual definition of a quote unquote insider. House of Representative rules may, however, consider congressional insider trading unethical. A 2004 study found that stock sales and purchases by senators outperformed the market by 12.3% per year. So that's pretty good if you're doing like fundamental investing. That's definitely a good average. So they and not that these people aren't very smart, even if regardless of insider information or not. Peter Schweizer points out that several examples of insider trading by members of Congress, including actions taken by somebody following a private behind the scenes door. This isn't the one. There's something where they flat out say what it is. Was that it? That must have been it. That's weird. It feels like did somebody just edit it or something? It's possible since it's trending on Joe Rogan right now. Um, oh, where'd it go? I just passed it again. Yeah, it said something about yeah, senators. No, House of Representatives. They generally do not. They do not meet the. Okay, what are they called? The House of Representatives. Control F. Represent. That's not the one. It's. Okay, I guess that was it. Yeah, the House of Representative rules may, however, consider. I thought I read that differently earlier. Members of the Congress are exempt from the laws that ban insider trading because they generally do not have a confidential relationship with the source they receive. However, they do not meet the usual. But it just comes down to the fact they're completely exempt from the laws that ban insider trading. All of Congress. And it's but it's just considered unethical for them to do so. So that's the thing basically is that in a nutshell it seems like they're safe, they're protected, they're a protected class, so we would have to have them somehow enact legislation against themselves and as regular people and they can hardly lobby and stuff like that. I don't know. I think we're kind of stuck in that pickle. Thanks for watching.